Hello everyone, this is Jem from Data Finance. Welcome back to our channel. We are with you on 7th of February afternoon analysis. On this video, we will cover some charts and then we will talk about some global news, what to expect from this week. All right, first of all, we will start with euro dollar. Why I'm starting with euro dollar? Because both currency is dealing, both economy is dealing with inflation. Inflation is not stopping in US, and this Thursday it's expected to reach to for the last 40-year high 7.3. It's really high expectation. At the same time, in Europe, a lot of people just expect it to slow down because gas prices in Europe was high in December, and in January gas prices declined. So everybody expect slight decline in inflation, but it didn't happen. Maybe like it's a delayed consequence. Maybe we will see next month. But right now, ECB's Lagarde just said that it's not good, and then we have to intervene in this inflation issue. So we may see some rate hikes sooner than planned. She just said that, and on weekend, some officials from ECB as well just announced that we may see a rate hike in fourth quarter of this year. With all these, after all these speeches, with hawkish speeches, we have seen a really high level of euro dollar right now. As you can see on our chart, it's just high, and right now testing support level. If it has just risen so fast, if it just can break this support level, we will see high and a sharp sell-off on that one. Because just look at it from this point, from the January of 28, it's only rising, slight correction, and here, so it has gained a lot of traction. So it has to give some of it, because global economies are always on a balance. If this balance just broken, everything gets catastrophic. So investor will just find a balance on this currency pair. Soon we will see that one. Just important, this support line. Just watch it out. When you just see this support line goes under that one, let me just tell you the level of that one. 114.20. 114.20 is the support line. If you just see under that one and go faster, then just get into bandwagon and sell it out. Even right now, you can sell euro dollar and then you can take your profit because it's not giving signals of going higher. And ECB just made an announcement, but the markets right now in Italy, in Spain, in Germany, in France, all the bond yield is just rising. In Greece, rising, and it's not good for debt, like a problem with debt countries. It's not good. Probably today in ECB talk we will see some dovish statements, and then it will help these decline. I'm just expecting that one. Otherwise, it won't help any country in Europe. All right, let's look at our next chart.
You are ready to win with us. GAN Markets.
All right, our second chart is German DAX index. As you can see here, on German DAX index, only decline, and right now 15k support level is just helping to go higher. As you know, like we are in still quantitative easing in European area. So tapering didn't start. So there are a lot of reasons to go higher. But in Germany, the industrial production and automotive sector, it's the most crucial part of the economy. So if we don't see good results on those companies, like chip shortages solved and electrification of these companies is on good track, If you just hear these kind of news, it will just go higher level, it will test higher levels. But if we don't see these kind of news, we will just see the same level of this one, even lower level levels are possible. And interest rate hike is not good for these companies because they are already, they are making profit, but also they are having they are getting credit from governments. If interest rate goes higher, then they will have higher cost of borrowing money, and it's not good for their earning reports. So we will see worse earnings at the end of quarters, and then it will affect eventually the index. That's the scenario. We will see the next days, but I'm hoping that a V-shaped recovery in coming days will happen. And even right now, it's giving the signals. It has tested a lot of times this level, and it didn't happen. And it didn't happen just like here. It is just reversing on upside right now. Let's look at our last chart. Alright, our last chart is Nasdaq. As you can see here, Nasdaq is just trying to make a dip for itself. So why I'm saying a dip? Because it has just risen so fast, and then it has tested 15,200 levels. Then from these resistance, it just made its correction, and I'm just calling this place as a correction. So it will just make another, it's just trying to, I'm not saying it will make, we cannot know for sure, but it's trying to make its rise again. On Friday and Thursday close, it has tested higher levels, but in the mornings they have just it has just declined. So this morning in US, right now it's morning in the US, is in green. It has started in green. So the first level, the critical level will be this level, 14,800 levels. If it just pass over that one easily and don't struggle, if it just test this resistance level, then we can just talk about future rise of Nasdaq. Because the ingredient of Nasdaq, Facebook, and Netflix, Amazon, and Microsoft, Apple, Tesla, these companies are still with us, and then they are, yes, some of them are overvalued. I can understand this one, but still they are the biggest companies, and we are on digitalization of global digitalization. So in these digital worlds, we need those companies, and those companies will make money. An investor will just prefer these companies compared to other companies. In this pandemic, central banks have printed a lot of money, so this money should go some places, and these companies are best places for many investors. We will just witness all together, but right now on the last candle, let me just show it 1 hour, then you will understand better. As you can see here, there is a rising trend on Nasdaq. Thank you so much for watching us. We will be together on more news, and we will cover more charts with you. Have a nice and profitable day. Bye.